So typically, what sort of deposit would an investor need to front to get another investment property or their first investment property?
So with the APRA changes, one of the big things that they did want to change was the leverage on the properties.
Yep.
So they wanted to get rid of the 95% interest-only loans that never pay off.
That was my next question. Do they
No,
still do the 95%?
There's not many,
Right.
to put it plain. There isn't many. There is what I call non-conforming lenders. So
Right.
they basically play outside the general rules, and you could pretty much get funds through them at any time.
Yep.
But the mainstream or non-bank majors or non-major banks,
Yep.
they've all dropped down to 90% max.
Right.
So you'd be very lucky to get something above 90%.
Yep.
Obviously, if you go above 80%, you pay lender's mortgage insurance.
Yes.
But on that, depending on or how hard APRA came down on the certain lenders was how hard they reacted. So some banks, such as AMP, they dropped it down to 50%. So you had
So
to
you're
provide.
paying
You had to
lender's
provide,
mortgage insurance for...
or it was just maximum.
Yeah,
you just
right.
could not go above 50%.
Right.
So you needed 50%. So what they've done with that is obviously no investor's going to go with them, so they can't completely close the door, but no one's going to go to them, so it's achieved their goal.
Yeah, right.
And just the other day, Commonwealth Bank I was having a chat to, and they've started to open up again to interest-only loans for investors.
Yep.
So I think it was in June, the amount of interest-only loans had dropped $2.6 billion in that quarter.
Wow.
So
it's worked.
it worked. It definitely worked.
The APRA goal has worked.
So the original cap was 40% of new loans, as it was capped at 40%, so no more than 40% of new loans could be interest only.
Yep.
So they've come in, APRA, and said, right, we need it down to 30.
Right.
So a lot of the major banks were a little bit over 40%, so what they had to do is implement a lot of measures to bring that down very quickly.
Yep.
So that's what they did. It worked. Look, I don't disagree with the overall goal of that.
Yep.
It's to reduce the leverage. If there is another GFC,
Yep.
there's not going to be as much leverage in the market.
Yep.
We've got a little bit of room to move there.
Yep. So if you're buying a 50 grand investment property, you're needing 50 grand to really satisfy it, plus stamp duty as well?
Look, at least 10% plus costs. So
Yep.
10% plus stamp duty plus whatever else comes into it.
Yep.
You can borrow the lender's mortgage insurance. Some will cap it, some won't. Look, the majority of investors are leveraging off an owner-occupied place.
Yep.
So the best way to deal with this is to pay down your owner-occupied debt as quickly as you can.
Yep.
So any sort of lump sum payments, pay that down. It increases your equity that you can borrow
Right.
against.
Yeah.